The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 15th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is tossing at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. Would love to hear from you. But if you got a question you can't call in, you can always send me an email. For that, send that off to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, try to send that off early, just to internet service providers. And when I get the message and so forth, there's a couple messages from yesterday that I didn't get till late, till we were actually off the show. And I'm going to go ahead and cover those instruments. That was DBN and Rig out there. So go ahead and send that in. And, of course, if you're inside our Tigers demo, any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a little bit of a mixed bag. That mix is coming from the Russell 2000, which is up 4 points. Otherwise, all the other U.S. indices trading to the downside. Dow's up 106, S&P 10, NASDAQ 124, semis down 31, trend is up 94. You've got gold trading down 19 bucks, silver's off 24 cents, light sweet crude back $1.50, natural gas off 3 cents, the 30-year Treasury down 20 ticks, trading at 126.11. The leaders in the clubhouse to the upside are Martin Marietta up 25 bucks, that's a little over 7%. Airbnb, nearly a 13% mover, 15 bucks. Encore Wire Corp is up 9%, $14.68. Solar Edge up 15 bucks, 5%. Mercado Libre is up about where'd that go to? 9 bucks. That's 0.8%. And the Trade Desk up 26 bucks. 26%. That's a $13 move. The shakers out there, Lithium Motors up 24. That's a little over 8%. Asma Holdings down 11.50, down 1 7/10%. MedPace Holdings up $9. Credo Technology down 9. Akamai Technologies is up 8.60. Hey, about that Credo Technology, that's a 46% move to the downside. That is a haircut. So, what do you want to look at? Well, we do have some requests out there. Let's go take a look at the equity markets first, try to get a feel for what they're communicating to you and I. So how do we want to begin? Let's begin by taking a look at it. We'll just stay on the same panel for the moment. If we take a look at each day's candle, what is it that we see? Well, I'll share with you what we see. We see that price is neither taken out the high or the low of the prior day. So we got basically no meaning here. We got a choppy market is what we've got. So that's the simplest of simple technical indicators. Where are we trading and compared to yesterday? And right now, for each of these, we're trading with inside that bar. So not a clear message there. What other messages do we have? We've got a consolidation with inside the bullish structure daily profile of the S&P 500. That's between 40.27 and 41.68. In the case of the yen-Q, prices trade above the top of its daily profile. It does have a top. It's a TD9 count top. So overall, we've got a neutral signal. Neutral because price is above resistance, the top of its daily profile. The Dow has been trading in a sideways range. I saw somebody post something in the den thinking of taking diamond puts for Friday. Have at it, if you will, but take a look at that chart there. You can see that for the last 2 weeks, maybe 3 weeks now, of trading sessions, all that the Dow has done, or the Dow Equity Future contract that is traded between support and resistance, and it is a narrow range. Support is at 33,716, resistance at 34,179. And if you get below support, you've got that rising trend line. So it may be a good move to go ahead and short the Dow diamonds, but I would just take a look at the activity over the last couple weeks, and so you'd have to have a really good inclination to take that short and just realize, that support level is held. You might be better off to try to take that short position, I would say, in the S&P 500, but you got to be careful there too. It's trading with inside its profile, but it's a larger profile, and you really do have that support at 40.67. So let's move over from these charts. Let's go take a look at the daily, the multi-panel set of charts out there. Oh, you know what else I'll do? One other thing before I switch panels here. I want to take a look at the VIX. If we take a look at the VIX index here, it is trading below its 50-day exponential moving average. So here's an example. The VIX is trading below yesterday's low. That's a bearish message for the VIX. That then should be a positive message for the S&P 500, for the ES Mini. So that's another thing to take into consideration out there. If it was the other way around, we were trading above yesterday's high, well, then that would be seeing or suggesting we should see the market start to crater, because yesterday's high was just above that 50-day exponential moving average. So that's the first. So the point that I want to make here is, even if we get until that spot volatility gets above its 50-day exponential moving average, the move lower is kind of muted, if you will. Now, so that's a bullish message. If we take a look at the New York Stock Exchange, the advanced client oscillator, what you will see is we're still below the zero threshold level. When you're below the zero threshold level for more than for 2 consecutive sessions, it tells us that the sellers are the ones that are in control of the general market. So we've got offsetting messages here. Remember, we took a look at how price was trading today. We haven't taken out yesterday's high or low. Got a choppy market. So really, that's the message as we speak right now. How does this market get to something other than choppiness? Well, one way that it could do that, or it could be signaling that to us, I'm going to change screens here now. And what the heck? Change windows. If you give me a moment, we'll get over to the white background charts. Hopefully that is what you see on your screen right now. It should be 8 charts, all with white backgrounds, each with a different time frame. This is the ES Mini. So if we take a look at the ES Mini on the daily time frame, I'm going to expand this out here. And in order for the ES Mini to generate a topping pattern, because there's an A to B equals C to D pattern here along that C to D leg out there. And in order to generate a 3-river evening star, price has got to close halfway inside, more than halfway inside the candle from 2 days ago, February 13th. Where is that at? You'd have to do the math. I'm thinking it's somewhere around 41.22, 41.23 out there. So if you did see it close around 41.22, then do the math, make sure it's halfway into that bar. That would then trigger or signal to you and I that we have topping patterns for all 4 equity future contracts. That could be the signal that then just suggests that we head back to support. Support is between 40.27 and 40.67. So that's what I'd be watching for at day's end out here, is the ES Mini. If we look at that 5-hour time frame chart, all we see is a sideways move for the most part out here. So choppy on the 240, choppy on the 120. With regard to signals that are out here, there's a TD9 count bottom that formed at 3:30 this morning. It really was finally confirmed at 4 a.m., but formed at 3:30. Price is not taken out that low, so that still remains an active bottom pattern. On the 60-minute chart, though, we can see that after it formed, that we're the bottom left here, we can see that after that TD9 count pattern formed, 334 this morning, what price did was it ran right up into resistance, oscillator, and change line, but we did see a spike all the way up into its breakdown level. That breakdown area, so this would be an important area to watch to the upside, 41, 42, 25. I'd say if you close above that, we're headed higher to where? At least 41.56. If we take out that TD9 count, we're headed to 41.0150. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 118, S&P's up 13, NASDAQ 142, and the Russell's up 5 points. One last thing about the ES Mini, or comment about it. This chart here, what this does is takes a look at consecutive days up and consecutive days down. Down are the ones in red, up are the ones in black. And what we can see here is just coming off of the December lows out here, most of the pullbacks have just lasted for 2 days. There have just been 2-day knee-jerk reaction bottoms out here. We did have one 3-day move that was back on January 19th, but you can see the majority of these have been 2-day pullbacks. Well, yesterday was day number 1. Today could be day number 2. So I would have to say, if we don't get that close inside halfway around that 41.21 area or so, 41.22 area of the ES Mini today, then likely this is just a 2-bar knee-jerk reaction. Now, we still got resistance inside the ES Mini. That 41.80 level is a swing point out there. That's this swing point right here. From the trading day of December 13th. That's at the 41.80. So that's still a resistance area. If price can close above that, we should get an A to B equals CD to the upside. So that's what I see when I take a look at the charts here for the ES Mini. Let's go ahead and spend a little time and take, well, I guess last time, let's finish this off actually. So let's see what's going on from a market breadth standpoint. So let's open up our TAS market breadth tools. Here's the S&P 500. You'll see that the bearishness, if so to speak, is only on the 60-minute time frame. That has not changed throughout the day. So this morning it was like this. We have 115 instruments trading above profile, 215 below. That gives us that bearish designation. Out here, that's on a 60-minute chart. But if we take a look at the 60-minute time frame chart for the ES Mini, we'll just expand it out. This is the one that's got a TD9 count bottom. That's been tested several times and has held. So here again, watch that 41, 42, 25. If you get it close above that, the message would be moving up to 41.56 out there. That's the top of the current profile. All right, so that's enough for the ES Mini. Let's go move on and take a look at some of the requests that have come in. Let's go to our first one. The first one actually came in yesterday, and that was sent by David H. in Tomball, Texas. I'm not going to do him a whole lot of good, but I also see that McGuppy inside the Tiger's Den has a question about this is for Devon Energy, DBN. And so I know that I believe David H. was trying to see if there was any kind of tell before earnings were released yesterday. And we'll take a look at that. The answer is there's not, and I'll explain that in a moment. McGuppy says he's been a long-term position of Devon, which is having a bad day. You see the low of 56.41 is an important support area, 56.41. Okay, and now I'm assuming that's the swing point here from January 14th. That is. Now, the volume there was 9 million shares, 9.7 basically to be exact. So far today, you've done 17 million shares. So you're pushing down into that support level or that swing point with volume. So even if it rejects that area out there, again, that is the 56.41 level. Price should at least test it again tomorrow. And if it cracks through there, we might have an A to B equals CD to the downside. We'll spend a little bit. We'll go try to figure that out here in just a few. So the question is, so I see the 56.41 is important support. Debating about adding if that level holds or selling if it breaks. Got it. So it's kind of really just confirming what it is that. Let me see here. Am I missing something? Oh, okay, great. I'm not missing something. Great. Okay. So let's go take a look at the charts for Devon Energy. First, with regard to adding back or anything. Now, it's only the 30-minute chart here, guys, that we're taking a look at. But all I'm looking for is see if there's any kind of a bottom pattern, and there is not out there. So I don't know that now is the time to add to the position out there, especially knowing that price is moving lower with volume. As we expand out the daily chart for Devon, we can see that it has triggered a Rhodes momentum indicator signal, and it is in wave number 7. That is letter G. A very small portion of the Chapman wave out there. I recommend that each of you learn that Chapman wave. It's a great tool out here. Wave number 7's kind of referred to as that rogue wave. That can be a bottom. Now, in order for that to be a bottom, you need to see a higher low form. So the earliest that we could get that signal would be tomorrow at 4 p.m. out there. So it's got the potential. So I see what you are considering, McGuppy. Maybe you weren't aware that it was wave number 7, letter G out there, but now you know that that is the case. Is there any other kind of bottom signal? Just that Rhodes momentum indicator pattern, which is a beautiful pattern. You wait for a bullish reversal candle. So that might really be your time to consider adding to a position then. Now, you can see if price does close below it, and we know it's got the volume, that would trigger a very large A to B equals CD to the downside. So what I will do with that, we'll go back to that, we'll switch panels, and we'll go draw the A to B equals CD so I can give you accurate information on that. If we look at a weekly time frame chart, which we are, that's the center panel out there, price is trading below the support of its profile. That's at 60.10. You won't know if it's going to close below that until Friday, but you are moving into a swing point that was from January 6th. That had volume of 36 million. So far this week, we're at 34 million. So it's going to take, it could take out that's what the weekly. So let's just say that weekly is probably the swing point on the daily. And if you take 56.41, if you take that out, close below it at the end of the week, you've got the volume here. You're going to have a confirmed A to B equals CD to the downside on the weekly chart as well as the daily time frame. And on the monthly, we're simply back inside its profile. The momentum has waned here because price has been unable to close back above that green oscillator and change line. It's been waning, I guess, since the end of December, all of January, and now into February. So let's go switch over and take a look at the black background charts where I can go ahead and draw the A to B equals CD pattern. So we'll do that here momentarily. So just maybe someone just confirm. We had some problems yesterday. I want to make sure that they're all gone, but you should be seeing the black background screens. So just a high sign from someone. Now, what else do we see out here? So let's take a look at the potential A to B equals CD pattern if this were to form. And that means a close below that 56.41 level. So the A point that we're going to use is the high from November the 11th. The B point is going to be the low from January 4th, and the C point is going to be retracement up into January 27th. That was about a 47% retracement. So if you close below 56.41, it's going to generate a signal of an A to B equals CD to the downside that would suggest a 1-to-1 move down to 44.59 out there. So far, that level is holding, and you could make the case that we're in a bit of a consolidation here. But just watch 56.41. You're doing the right thing out there. You've got the A to B equals CD. The 1-to-1 would be the same on the weekly chart if we were to draw that in there. I don't have any additional information to either help you out, David, or you, McGuppy, but I'd sit tight since you are already in a position there. So I do hope that helps you out. Thanks so much for the request. Let's go to the next request that came in. This was from yesterday as well, and this was from Rig, and this is from HD. And HD, we take a look at Rig out here. We can see that momentum is waning a bit because prices are below the green oscillator and change line. We were above the top of its daily profile yesterday. It's dealing with that again today. We have an inside bar. If this remains just an inside bar basically communicates to you and I that the trend that's in place should continue. Well, that would then mean a move higher, but it's got to deal with resistance. In the case of Rig, that's at 759. I take that back. 743. 743 is the level of resistance out there, and then 758, which is the green oscillator and change line. If we look at the weekly time frame chart, the weekly time frame chart says caution Will Robinson. Why? Because it has a TD9 count top. That pattern will be confirmed this week, will be completed this week, I should say. That could trigger a move all the way back towards its oscillator and change line, currently printed at 603. So with regard to Rig, and I apologize, I don't recall what the question was, it has not broken any key levels of support. But we'll finish taking a look at Rig when we get back from this break. What I'll do is I'll try to pop up the seasonal study for Rig for HD. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back. You get the Dow down 97, S&P off 6. The NASDAQ just went slightly positive. The Russell's up 5 points. Semis are off 27. We got the charts here for natural gas up on my screen. That is a request. Did I finish taking a look at Rig? Let me just go back. I think we did. I may have had just a total brain fart there. Sorry if I did. Yeah, I think we did finish rig. If I didn't, please tell me, and my apology for even having to ask that question. I should know. But in any event, so let's go on to the next question here, which is from Alton. And Alton was just simply asking, where is support for natural gas? And natural gas, if we take a look at the daily time frame out here, the support is going to be the low of the bullish reversal candle. So Three River Morning Star. Remember earlier I was speaking about potential for a Three River Evening Star. So it's the opposite pattern that we're looking at here. And that is requires, for example, a nice big thrusting down day. That was February 28th. A very small-bodied candle right at about the bottom of the prior day's candle session. So we got that on February 29th. And then you need to close at least halfway into that first bar's down day, February 28th. Now, this can also be a 4-river, 5-river. You can get that bar from February 9th that expands itself and looks just like that going across the screen out there for a couple of sessions. But then you've got to have a bar that at least finishes halfway into that first down bar. But it's the February 8th. That's what created that Three River Morning Star. Now, this is the April natural gas contract. And you just asked about natural gas. We're rolling over into that. So it's the low of the pattern. In this case here, it happens to be the low of February 9th. That support level that you're watching is $2.35. So that's for the March contract. If we put up the April contract, and I should do that. So let's go here, natural gas. 0423. This will take just a moment to populate because it's going to go ahead and populate all of the other 7 time frames out there, but that's okay. So here when we take a look at the daily time frame, what we see is also a Three River Morning Star. So in this case here, one level of support is going to be the low from February 9th. That's at $2.44. But there was a bullish reversal candle, so it was confirmed by the D-point pattern for the April contract that actually took place on February 6th. That says the low of those two candles would be support. Well, it turns out that the low of the day on February 3rd is at $2.41. So we have $2.41, and then we have $2.44. So $2.41 is going to be your level of support for the April contract. So I hope that helps you out, Alton. If we take a look at just natural gas in general, this will complete its TD9 count bottom this week. It's the low so far formed on the week of February the 10th out there. So you've got a nice bottom signal there. What you don't have is any kind of a bottom signal on the monthly time frame set of charts out here. So Alton, I hope that helps you out. Thanks so much for the request. Let's go on to our next request out here. This one was coming in from I didn't write it down, but somebody wanted me to take a look at bonds out there. So I didn't write who made that request, but I did write down that we're going to go take a look at the 30-year Treasury. And this is for an individual that's been short. I believe they were short maybe the TLT. So as we take a look at the 30-year Treasury on a daily basis, what you should be aware of is that we are now in bar number 8 of a TD9 count. And that says on a daily basis, what the 30-year Treasury should do is form a bottom between today's Wednesday, and Friday. It doesn't guarantee that it's going to form that bottom. And what I mean by that, really a couple different things. The first thing would be bar number 9 still has to complete tomorrow in order to get a TD9 count. In order for that to occur, what price will have to do is close below 126.30. So that's a thing that you want to write down on your pad of paper and look at tomorrow to see if price closes below 126.30. If it does, you will then have a confirmed TD9 count bottom that will complete on Friday because that low can take place on the bar following bar number 9. Turns out that the TD9 count breakout support is at 125.03. So watch that level as well. So you're short the TLT. I don't have a reason to suggest that you jettison that position today or not, but you should be aware. In fact, the last bottom that formed out here was a TD9 count bottom. You should be able to see that. That was the low on December the 30th out there, and then that formed it didn't form a TD9 count top out here, but price was dealing with prior resistance that was established by that Rhodes Momentum Indicator top that confirmed on December the 16th out there. So it could be that we just have a consolidation in between those areas. I'm not saying that's what it is just yet, but you could or should see some type of bottom forming in the next couple of days. Now, we can see on these short-term time frame charts, 10, 15, 30, how they have triggered Rhodes Momentum Indicator bottom signals. Those are those black diagonal lines. So if we did get a bullish reversal candle, at least on a short-term basis, you'd be expecting anticipated a bounce. Well, it turns out we've got those Rhodes Momentum Indicator signals on the 5-hour, the 4-hour, the 2-hour, everything except for the 60-minute chart out there. So the cool thing about that is if you are short, you should be following these time frames out here. or somewhat similar to that. And what you'd be looking for is bullish reversal candles for an early signal of a potential bottom out there. So nothing that I see just yet. If I look at the days, consecutive days higher and lower out here, you can see this is in a world of hurt. It has gone as far as 6 days, six consecutive sessions to the downside. But again, most of them tend to be 2 and 3 bars, and today is going to be bar number 2. So I would say more likely than not, we see the 30-year Treasury form some type of bottom more likely tomorrow and Friday than we see that take place today. So hope that helps you out, whoever you are, because I forgot to write down who had that request. Let's go take a look at the next request. I did write this one down. This was from Dan inside the Tiger's Den. And the ticker symbol we're going to take a look at is VERU. No, that was RIG. So VERU. And maybe I will go. I think I answered the question on RIG, though. So let's go back to VERU. And Dan, I don't know what you were looking for, if anything, but just let me share with you what it is that we see right now. So we had a big gap down about 4 or 5 days ago. Maybe that was on February the 9th out there. And what did that gap down do? Just open this daily chart up. And nothing clear for me. You do have bar number 8 that is completing. Now, what this needs in order to form a TD9 count bottom, Dan, is it's going to need a spike. It looks like I need to move this over. I believe the low of the pattern so far is this low here from at $3.90. That was yesterday's low. Let me make sure. What's the low here? 388. I take that back. So price needs to spike below 388. And actually, today's got to close below bar number 4. So, Dan, if price does not close below 397, there will be the TD9 count, as we see it right now, will go away. And I don't know where it's going to end at the end of the day, but I would just watch that. Price has to close below that today. So then that says that we don't see any kind of bottoming. That would then say we don't see any kind of bottoming signal on the daily time frame for VERU. Let's take a look at the weekly time frame chart. The weekly time frame chart last week negated its TD9 count bottom by closing below the low from December of, looks like the week of December 23rd. That low was $4.57. So where's this thing headed to? Well, let's open up the monthly chart for VERU, see if we can figure that out. We're trade below swing points. It says you go back to the next perhaps breakout area. That would really be back here. That would be the week, or the month, I should say, of October 2020. So that could easily be the price target. And that's between the range of 230 at the lows and 274 at the highs out there. So I'd be coming back to the breakout area that was really established by that wide-ranging bar from December of 2020. Let me just take a quick peek here at a 30-minute chart with you. Again, ticker symbol here that we're looking at is VERU. And on a 30-minute basis, we can see we got a bounce on the daily time frame. What do we got going on here? Well, you had a wave number 7 bottom. That was on 3:30 in the afternoon on February 9th. That's led to just a sideways move, Dano. Just a sideways consolidation since that bottom was put in. Right now, price is dealing with resistance. That's up at the $4.15 area. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Dow's down 88. The S&P's off about 6. Nasdaq's up 9. Russell's up 5. I did figure out what I had left open on rig out there, and that was I was going to go see if we could see our seasonal charts. So let's go take a look at those out here. Now, here's a seasonal chart. We go back 29 years for a rig. Now, what I can do here is I can go ahead and I can put in exactly where we're at today. And this shows us that where we're at today, just normally what rig should do is continue to move lower into about the end of February timeframe out there. And then what rig does, it typically has a big move over, a big move up just for a few days and then pulls back down. But it does start its move higher towards the end of February as opposed to right now. Let me detrend this just a bit. It hasn't really, that didn't do much to it, so nothing to worry about there. Here I can get rid of the February 20th. That didn't, or I should say really the COVID-20 issue, so that didn't really affect things. So when we take a look at the seasonal chart for the last 29 years, that's what rig's done. Let's then bring this down to about 10 years. Same pattern here in the 10-year series out there. So with regard to rig, it looks like it wants to head lower, at least from a that's what it's dealing with from its seasonal perspective out there. So that kind of finishes off the rig request. We've taken care of VRU out there. Let's go to our next request, which is coming in from the den, from Ray inside the den. And I believe that Ray wanted to take a look at FAS, one of the FAZ or FAS. And what I'm going to do, Ray, is because those are the 2 or 3X, we're going to take a look at we make our trading decisions off of the 1X, which is the XLF. So I'm going to take a look at the XLF, share with you what it is that we have out here. Do we have a sell the D point pattern? Well, let's take a look at the A to B equals CD pattern. The A to B, I'm going to draw that in. That's pretty easy. It's easy to also draw in the B to C and the C to D. Here, I'm just going to move this line over to the C point. So now we can see the A to B equals CD. And would you say that that has completed? Gets us up to about 37.51. We've only been up to about 37.08 or so. I would say that that has not completed. So we do not have a completed sell the D point pattern. Price is above the top of its daily profile, which is 36.46. That's a bullish signal, but it is below its green oscillator and change line. That tells you that the momentum has waned. So, but it's bullish. When we take a look at the XLF, it is bullish out there. Just realize you've got that A to B equals CD pattern that would complete around the 37.50-ish range out there. And if you did then get a bearish reversal candle, that would suggest that we would have a top, but we could head lower. At least price would go back and test support out there. So the daily chart for XLF is bullish. The weekly chart for the XLF If it can clear the swing point from December the 2nd, that high is at 36.49. And it actually did close above 36.49. So let's see, the volume was 222 million. We got to close above that with 198 million. So a little bit light in the loafers out there to say that we have a confirmed A to B equals CD to the upside. But we do have, but sometimes you don't get the volume, Ray. So on a weekly basis, the A to B equals CD pattern here is much larger. Obviously, you can see that. When I say much larger, that says that the XLF could get up into the 40-10 type area. That may be about where the 1-to-1 would complete. So, but it's bullish. The weekly chart is bullish, with the exception is we haven't taken out last week's high or last week's low out there. So neutral to bullish, but it's above profile, above its green oscillator and change line. On a monthly time frame right now, prices trading with inside its profile, and it is trading. It closed above, and it is trading above that green oscillator and change line. A continued close above that level is saying that 40.57. That's where the next resistance level would be, the top of the monthly profile. So I think as we take a look at the XLF here, what you and I have done is we've confirmed there's no topping pattern inside of the daily time frame. The weekly time frame has a to B equals CD pattern on the upside, and the monthly is bullish as well. So it looks to me like what the XLF wants to do is move higher. That confirmation will come when that bar, the daily bar, closes back above its green oscillator unchanged line. If we take a look at a 30-minute time frame here for the XLF, what do we have? Not much. I see an A to B equals CD to the downside, but that hasn't completed. That may complete if price is unable to get above that it's 30-minute oscillator and change line, currently printed about 36.89. Then what you'd have is an A to B equals CD to the downside. So let's take a look at that. Now, this is intraday that we're taking a look at that. So it's only the intraday where, we've got this choppy market out there. The 1-to-1 would take us down into about the 36.24 area out there. And as long as price remains below that green oscillator and change line, that certainly is one very possible outcome. So I hope that helps you out, Dan. Dano, was it? Who was it? That was Ray inside the Tiger's Den. My apology. That was Ray inside the Tiger's Den. So I do hope that helps you out. Lastly, what I'll do for the XLF here is the daily time frame. Just take a look at what it's doing from it's a Texas two-step out here. We can see, just like the general market, we've seen a couple of two-steps. We've seen one three-step out here. Yesterday was bar number 1. Today could be bar number 2. So if we get that today, a little bit lower close than yesterday, no big deal. In fact, that could be an entry point into the XLF to the long side. So I hope that helps you out. Thanks so much for the request. Let's go on to our next request, which is coming from inside the Tiger's Den from SNP, who want to take a look at Valero. VLO is the ticker symbol out here. So as we take a look at Valero, just try to spruce this up just a tad, make it a little bit easier for people to differentiate the daily from the weekly from the monthly. There we go. So when we take a look at the daily time frame for Valero, what do we know? So we know that there's a sell to D point pattern. You can see the small A to B leg, and then the retracement, and then a very large C to D leg out there. And that confirmation came here with that bearish engulfing candle back on January 27. Makes a move lower, finds support basically at a new profile that forms on February 7th. We're trading with inside that profile. It's a bullish structured profile. Really, the message of the last 3 days, not today, but the last 3 days, was that price should have made its way to 145.52. But it's getting snookered a little bit by light sweet crude trading lower right now, down by $1.30, and just the energy sector getting hit just a tad. So right now, what Valero is doing is consolidating with inside its daily profile. It's a bullish structured profile, so support should be anywhere between $1.28 to $1.33, $133, $128. There's change out there, but let's not worry about that. I would say more likely than not, based upon what we're looking at today, that conditions suggest that price will go tag that 133 area out there. If I look at the weekly time frame chart, it has a confirmed Rhodes momentum indicator top. It's really led to just a sideways move, so to speak, for the last 2 weeks out here. No reason to think that is going to change. And then support is really down at that monthly oscillator and change line at 123.60. So what we've got out here as we speak is what? You've got a confirmed Rhodes momentum indicator top on the monthly chart out there, but with price above profile and above its green oscillator and change line. Its signal is neutral. The daily says, you know what, I've lost my momentum, so maybe I'll pull back further into that profile support level, and that's really be confirmed by the weekly. The last thing that we should look at, or at least one of the things that we'll look at as well, is the 30-minute time frame chart. What do we see out here? We do not see a bottom pattern. We did see a confirmed Rhodes momentum indicator top. That took place at 2:30 in the afternoon yesterday. This may go on to form a TD9 count bottom. We're in bar number 7 right now, so you could get a bottom between 12:30 and 1 inside Valero, BLO. Steve Rhodes with TFNN. We get back from this break, we're going to take a look at Twilio, TWLO, for Dano and the Tigers. He wants to know, is it going higher or lower? Look at your charts and answer that question for him. Do it.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. A mixed bag out here. The Dow's down 67, S&P's up 2, NASDAQ 100 up 30, Russell's up 7 points right now. We're taking a look at Twilio. With regard to Twilio, here's a seasonal pattern. It's only 6 years worth of data, but the red line, again, that represents today, and we can see that Twilio typically tops over the last 7 years. This is where the top has come in. A top has come in. We simply see just a slight move lower into the end of February, then one more move up into March, and then a move down into the early part of March out there. So that's the seasonal charts. If we take a look at Twilio, this has a TD9 count top that formed out here on February the 2nd. It's led to just a sideways-ish type move, a slight move lower, but price above that green oscillator and change line. So if it remains above that, that's a suggestion that price might want to get into that TD9 count top. Now, that swing point out there has volume of 5.6 million shares. Today, you're pushing into it with 2.6. That's not too bad for 2 hours. So it does look like Twilio wants to challenge that swing point. But you do have that top in place when you have a seasonal chart that says that you could form a high out there. So I hope that helps you out with regard to Twilio. Let's go to the next request, which was to take a look at gold from the short side. We take a look at gold from the short side, I don't see it. If you look at a 10-minute, 15-minute, 30-minute, 60-minute, 120-minute, 240-minute, and 5-hour time frame chart, they each have Rhodes Momentum Indicator signals. Some of them have confirmed bottoms. The 10-minute does. The 15-minute does. 15 minutes dealing with resistance. The 30-minute does out here. So if you're asking me on a short-term basis, would I go ahead and short gold right now? Not a chance. No, I just don't see it. You've got too many of those bottom signals. That doesn't mean gold's not headed to 1827. I just think that right now is not that time. So I hope that helps you out. GP inside the Tiger's Den. Let's go to the last questions here, which is to take a look at the 30-minute and the 120-minute charts for the equity futures charts. NQ specifically here. If you take a look at the NQ, I'll just simply expand it out. The NQ is traded above its TD9 count breakdown level of 12,623.75. No topping signal other than getting back here to this wave number 7 candle. That's up at the 12,687 area. So on a 30-minute basis, the NQ looks strong like bull. And that ain't no bull out there. But let's take a look at the 120-minute chart here quickly. What do we see on the NQ? The resistance level for the NQ, I'll give you two of them. One is going to be up at the top of its profile. That's up 12,687, and above that, 12,794. Folks, have a wonderful Wednesday. I'll see you here tomorrow on Terrific Thursday. Please stay tuned. We've got great programming lined up. Take care. Have a wonderful day.